Hello everyone. Welcome to my YouTube channel Indian Bull vs Bear. In today's video, I will share my analysis of historical trends of the tire sector. This video is part of the series The Final Missing Piece. Before moving on, please read the entire disclaimer carefully. The tire sector of Indian share market comprises of companies which are primarily involved in the manufacturing of all kind of tires, be it summer tires, high performance tires, tires for two-wheelers, three-wheelers, four-wheelers, heavy-duty tires, and all sorts of tires. It plays a key role in supporting the country's automotive and transportation infrastructure and caters to regional equipment manufacturers, the replacement market, and the exports as well. India is among the top 5 tire manufacturers globally with a well established domestic industry. The major growth drivers for the sector includes automobile industry's growth, replacement demand, rural penetration, export opportunities, and premiumization and radialization of tires. The government supports this sector with policies like anti-dumping duties, Atmanirbhar Bharat Abhiyan, PLI scheme for auto and auto components, natural rubber support, and import restrictions. The key challenges for this sector includes raw material price volatility, dependence on natural rubber, currency fluctuations, intense competition, and EV transition. So that's the summary of the sector. Let's now try to identify trends in the sector using two graphs: yearly returns graph and monthly returns graph. I've analyzed the share price movement of last 10 years of top 8 companies of this sector and created these graphs based on that data. I have included only top 8 and not top 10 because I did not want to include any company with market cap less than 100 crores. The top 8 companies of this sector comprises of 3 large cap, 2 mid cap, and 3 small cap companies. Let's start with the first graph, which is the yearly returns graph. So in this graph, these green bars shows positive yearly returns, red bar shows negative yearly returns, the orange line down at the bottom shows cumulative returns, the green line shows number of months with positive returns, whereas the red line shows number of months with negative returns. Let's start with 2015. 2015 was an below average month for the sector with only 11.44% returns with 8 negative months and 4 positive months. The situation improved in terms of returns in 2016, and this sector managed to give returns of 27.46%. But still, in this year, as in that year as well, the sector gave negative returns in 8 months out of 12, and only uh, gave positive returns in 4 months. In 2017, though, the sector performed quite good and managed to give returns of 59.33% with 9 positive months and 3 negative months. But then 2018 uh, proved to be a very bad year for the sector, and the sector managed to give returns of negative returns of minus 19.30% in that year with 7 negative months and 5 positive months. In 2019, the sector again gave negative returns of minus 3.42%, 7 positive months, and 5 negative months. The situation improved a bit in 2020, and the sector gave average returns of 15.44% in that year with 10 positive months and 2 negative months. The situation improved further in 2021, and the sector managed to give returns of 23.26% in that year with 7 positive months and 5 negative months. 2022 proved even better than the last 2 years, and sector gave returns of 49.64% in that year with 8 positive months and 4 negative months. 2023 too was a very good or very strong year for the sector with 45.13% returns, 9 positive months and 3 negative months. But 2024 was just an average year for this sector with 11.13% returns, 7 positive months and 5 negative months. So not a very impressive graph. Anyways, let's see the cumulative returns. Cumulative return. Let's follow this orange line, and last 10 years cumulative returns 505.77%, which is 6x in last 10 years. Not very impressive returns. Let's see the key takeaways. First is the cumulative return. We have just seen that 505.77%, which is 6x, so not much impressive. CAGR of 19.74, again not a very impressive CAGR, although not the worst, but still not a good CAGR. Net negative yearly return only 2 years, so which is good. 2018 and 2019 were the 2 years in which the sector gave negative yearly returns. Best year was 2017, as my sector managed to give returns of 59.33% in that year, and the worst year was 2018, and the sector managed to give returns of minus 19.30% in that year. Positive to negative year ratio is 4 is to 1, a good number. A limited number of sectors have this ratio as a good number. So all in all, an average graph. Let's move on to the monthly returns graph. Let's see how it looks like. This is the monthly returns graph. The green bars over here shows the positive mean monthly returns. The red bar shows the negative mean monthly returns. The green line shows number of years with positive returns, whereas the red line shows number of years with negative returns. Start with January. January has an average monthly return of 1.15%, which is, I would say, barely average number, below average returns of 1.15% in January, with 7 positive years and 3 negative years. February is clearly the worst month of the year for this sector, with average monthly returns of minus 3.04%, with 7 negative years and 3 positive years. March, a flat month with negative monthly average returns of minus 0.26%, 6 negative years and 4 positive years. April, the strongest of all months for the sector with 5.67%, 7 positive years and 3 negative years. May, another flat month with negligible negative returns, that too on the negative side, and 6 negative years and 4 positive years. June, average month, 2.77% returns, 5 positive years and 5 negative years. July is another strong month for the sector with 5.37% returns and 9 positive years in the last 10 years. So that is a plus point for July. August, another flat month with 0.39% average monthly returns, 6 negative years and 4 positive years. September, a decent month with 4.09% average monthly returns, 8 positive years and 2 negative years. October, another flat month with 6 positive years and 4 negative years. November, an average month of with 3.24% average returns, 7 positive years and 3 negative years. December, another average month, 2.02% average returns, 6 positive years and 4 negative years. So all in all, 1, 2, 3, 4 months with average negative monthly returns, and one and August for sure is a flat month. So 4 negative, one flat. 5 months which do not give any significant return, and there are only couple of months like April and probably June which gives some sort of returns to its investors. Otherwise, there is nothing much that any other month give returns to its investors. Let's see the key takeaways anyways for this graph. Cheaper months: February, March, May and October. So February, March, May and October, 4 months with average negative returns are the cheaper months. We can include August as well in the same category. Costlier months are April and July. So April with 5.67% average returns and July with 5.37. With July, the strong point is that in the last 10 years, 9 times this sector has given positive returns in month of July. So I would even rate July a even better month than April, although April has higher average monthly returns because of this 9 positive years in the last 10 years. And finally, the positive to negative month ratio is 1.40 is to 1, which is 1.40 positive months against every one negative month in the last 10 years, that is in the last 120 months. Again, not too bad, not too good type of number for this sector. So that is all from my side in this video. Thanks for watching this video. If you have liked it, press the like button, subscribe to the channel, and share it with your family and friends. I'll be back soon with another video. Goodbye for now.